Good morning, everyone. A very warm welcome to all of you on this Thursday expiry. Today is 8th of December, and we are here to look at Nifty and Bank Nifty analysis. And also, we'll have a look at the stocks that we are looking at. Nifty, Bank Nifty, both these levels are towards the support level as we have marked a couple of days back. And the specific level of 18,551, which is where Nifty is currently, and another level 43,043, where Bank Nifty is right now. We had identified a support of 18,600 yesterday and 43,100. I would still say we are lingering around those same similar support areas. Now, whatever the announcement which was made by RBI government, I feel that the market has a very little upside to it. Yesterday, we had categorically suggested that from these levels, Nifty might form a base, and maybe we are headed towards 19,100 or so. Now, as of now, the charts do not confirm anything for the new high, but let's say I have a feeling that from these levels, like 18,600 is our support area. So from this zone, we should steadily bounce. We have one of the target of 18,583 which got completed yesterday. Another target is 18,511. These were scheduled target for this particular week. So far, this candle or this entire yesterday's fall is telling me that it is being portrayed that the market is going to fall, but eventually it should take a support around this level, this zone, and it should steadily bounce from these levels. So if it starts bouncing, then and only then we'll start talking about the next bullish targets or so. But as of now, as of today, I feel today's expiry, there's a great deal of possibility that we might remain sideways. It will remain a dull kind of a expiry. The options data do not say anything concrete about a bullish or a strong bearish kind of a moment. The price range will be 100, 200 points up and down. That's the only that I can read from the Nifty data. So let's see if we get a breakout on a 15-minute chart. If we get a breakout above this zone, then and only then the new bullish positions can be created. Right now, from these levels, I think this is going to be the current range which we are looking at. And if we get a breakout above this, then and only then I will consider going long. If we get a breakdown below this, then I will consider going short with this as a stop loss. So, guys, when I'm talking about this particular range, when I'm talking about this uh, day's range or a day's action plan, the opening and the follow-up candles will be very important. So again, this level is about 18,600 and the lowest level is somewhere around 18,527. So 100-point range, and if we move above this, 100-point plus is possible, and if we go below this, 100-point negative is possible. Or otherwise, it may so happen that for the entire day today, we'll remain in this particular range. If it happens so, then there is no trades for me. There are no trades between this particular range. I will just let this day go, and we'll keep on uh, being in the trade of a strangle. Yesterday, I was long in Nifty and I had to accept my stop loss because after this particular action, it was a stop loss hunting day. Purely, if you see, the price actually went up till the high of the day. It broke above yesterday's movement, yesterday's high as well. Both the ways the stop losses were hit. Yesterday was the stop loss taking accepting day, and that's how the market is currently. So I've accepted stop loss in Nifty as well as Bajaj Finance. But let's talk about Bank Nifty first, and then we'll come on to Bajaj Finance. See, Bank Nifty range is in a way more range bound as compared to Nifty. Nifty yesterday we saw some movement, but this also gives me a little expectation, little hope that from these levels, if let's say we have sustained these levels, and if we are slated to bounce from current levels, then in that case, we are still lingering around 43,100 price. So again here, the big mother candle which is printed yesterday, after monetary policy, we got this big mother candle. So the high and low of this candle will be important. For a directional bias, we have to have a close either above this or a close below this. So this is the range, or this is the plan of action for today's day. And I feel that we may remain between this particular range. That's what my expectation is. And tomorrow onwards, we'll get a bounce. But let's take one day at a time, as like the current phase is very challenging and it is just moving in a consolidated manner. So it has to break on the upside or it has to break on the downside. If this base is formed and if we see a quick up move, then very quickly we can see some 500-600 points up move in maybe 2 days. So maybe tomorrow or on Monday, we should see that up move happening. But we have to have a confirmation. The reason I accepted stop losses yesterday is primarily for a very simple reason, that if the positions are loss making at the end of the day, there's no point to remain in that trade. If at all our bias, our analysis is correct and the market starts moving in the same direction, we can again create those positions. So keep it very simple. In current market conditions, it is not at all convenient to carry those positions because market is behaving a little haphazardly, and those kind of movements or insane gap up and gap downs are in a way fluctuating to your conviction and also your MTM. So more importantly, if your stop losses have been taken out, you have to accept that and move out of the trade and do not keep on fighting with the market. So that's how the things are happening. uh, about the strangle, it is steadily declining, steadily giving profit day by day. The hedges are doing well, what they are meant to do. The hedges I have not added into the payoff diagram because these are the weekly expiry hedges, and I have taken these hedges taking into consideration. See, I have sold 17,500 put and 17,600 put, whereas the hedge I have bought is 18,000. So I'm expecting, let's say, if there is some black swan event, there is some uh, unseen gap down. So this 18,000 put will take care, and also at a very minimal premium. So this is the reason I have selected this. On the upside, I'm not at all worried because this range is quite enough to sustain those trades. Because if you look at the range, quickly I'll just share the range with you. This is what the trade is. And as per the range calculation, the break-even points, our break-even point is between 17,253 and 19,554. So this is a huge range, a big range, and I'm expecting market to remain between this range by the end of this particular month. So this is how I'm looking at the current market. So even if the directional trades or the intraday one of stop losses are getting hit, the positional trade is doing good and it is going to deliver us some better returns at the end of the month. That's it from me, guys. Thank you so much for watching. I'm signing off. Bye bye.